Hello, everyone. Welcome to another episode of the Alt Investor Podcast that equips you with the right knowledge and provide you a way of alternative thinking before you make your decisions with respect to alternative investments. My name is Yashunta, and I'll be your host today. And today, I'm very delighted to welcome Mr. Mukesh Bubna, a very accomplished professional in the finance domain. Mukesh was at the top of his corporate career when he took the plunge and decided to start Monexo, a peer-to-peer lending platform. In this episode, we'll discuss more about Monexo and the overall P2P lending space in India. Mukesh, a very warm welcome to the show and thank you so much for agreeing to do this. How are you doing today?
I'm fantastic, Yash. Speaking to you and a person who's sort of bringing the whole alternate investment together. Uh, it's a pleasure to be on your show today.
No, thank you, Mukesh. Thank you. So before we let's say start with what has been going on in the P2P lending space, can you tell us what's your journey been like up till starting Monexo?
Of course, I have always said, and I've lived a life where I say, dream, build, and nothing is impossible.
Mm-hmm.
That's the kind of characteristics I love. But by education, a chartered accountant and a cost accountant, got
Okay.
into consumer banking very early on, early 90s, when it was not even a word in India properly. And that too with luckily Citibank purely. Uh,
Mm-hmm.
Building out credit cards, consumer loan, odd car loan,
Wow.
personal loans, housing loans. So we had only four branches in India at that time, but we were building it beyond four cities, 15 cities, 20 cities, right? So that gave me a huge exposure.
Mm-hmm.
Uh, and I became a deputy CFO for Consumer Bank in India. Uh, Went on to become the Asia Pacific CFO for the cards and unsecured business.
Wow.
And then I said, enough of understanding the strategy of through finance lens again, but let me go back to building products, selling it, co-branding it,
Mm-hmm.
and to Hong Kong. So I worked there for almost 23, 24 years.
Wow.
In Citibank, and the only two functions or maybe three functions which I did not work was compliance and legal and HR.
Okay.
So got a bit of technology, a lot of finance, a lot of operation, a lot of sales, a lot of product management, etc.
Wow. I mean, pretty comprehensive then. I started my career in compliance, so, completely opposite. So, how would you explain peer-to-peer lending to our viewers right now?
Uh, so before the explanation, I would say first, I think the only regulated alternate
Hmm.
investment available in India,
Okay.
regulated by RBI.
Hmm.
It's a underlying under the underlying lending product is unsecured loans only, and again that is by RBI only. The
Hmm.
P2P lending guys cannot do a loan against cars or a bike or
Right.
a gold loans. We cannot do it, so it's unsecured loans. So
Okay.
think of a example where when we are investing in mutual funds, the fund manager is going and buying equities depending on
Right.
what is disclosed, large cap, mid cap, multi cap, small cap, right? Here, the lenders are the fund managers themselves
Hmm.
coming to the platform, and then on the other side of the marketplace is consumer borrowers, individual borrowers
Okay.
who are borrowing money, and you participate in their loans. So that's what
Okay.
peer-to-peer lending is all about.
Okay. So, what's the average, let's say, ticket size that you have seen on the other side of the equation? How much do they want to borrow generally?
So again, here there's a cap from RBI. 10
Okay.
lakh rupees is the maximum cap a borrower can borrow,
Uh-huh.
and on the lender side, the maximum cap is 50 lakh he can invest.
Understood.
Now, there's never a one is to one matching, so it's not possible that Yash, you bring 50 lakh rupees and I want to borrow 10 lakh rupee, you can give 10 lakh rupee. RBI has
Hmm.
put another cap there that Yash cannot give any borrower more than 50,000 rupees,
Okay. To
right?
reduce the exposure.
reduce the exposure. There can be other issues, money laundering, gifting,
Okay.
unpaid, right? Uh, so, P2P lender as a marketplace is very clearly defined as roles and responsibilities.
Got it.
The guideline is, well, 39, 40 pages, but in two or three paragraphs, it very clearly defines what a P2P lending marketplace can do and cannot do. So,
Mm-hmm.
example, what can do is like it can do screening of a borrower, KYC of a borrower, pull the bureau report of the borrower, report back into the bureau of the borrower, do
Mm-hmm.
collection for the borrower if he's not
Mm-hmm.
paying in time, right?
Understood.
Similarly, it what it must do, it has cannot touch the money of the borrower and the lender, so it has to have an escrow account.
Okay.
And it cannot do again, it cannot give guarantee or credit enhancement. This is not a guaranteed product. It
Okay.
has ups and downs for various reasons.
Mm-hmm. So I guess my next question would be, given this is such a regulated product, and I don't think 6, 7 years before when you started this company, people were even talking about it, or people were looking to invest. What made you take that plunge from your corporate career and decide to start Monexo first?
Uh, so for me, it's very unreal moment. I'll tell you, I've told this in many interviews.
Mm-hmm.
In 2005 in Paris, there was a conference which is called Future of Banking,
Okay.
and 25 foreign bank senior management was sitting there, and
Mm-hmm.
there was a consultant who was trying to moderate that whole session for 3 days.
Mm-hmm.
In that session, there was only one gentleman who was not from bank, and he was the founder of Zopa, which is now a digital bank in UK.
Mm-hmm. Correct.
And it so happened that he was sitting right next to me. We got talking, and he explained what he was doing. He said Zopa stands for Zone of Possible Alignment.
Okay.
He said there's huge issues around credit. In UK, banks don't give credit.
Mm-hmm.
So what he's doing is he's bringing those people who have money in a coffee shop and those people who need money into a coffee shop, and he's doing a session for them.
Interesting.
From there, I kept in touch with him. I was impressed with what he was doing being a banker.
Mm-hmm.
I literally dismissed it as a bound to fail.
Mm-hmm. Oh, really?
Yes, bound to fail in my mind, right? In 2008, financial crisis happened. I
Right.
was flying to US quite a bit.
Mm-hmm.
City was in the middle of the crisis, if I may use that
Yeah.
word. And there I land and see Lending Club and Prosper, the two big
Mm-hmm.
names which have taken roots and they're growing. We are cutting down segment after segment in the banking world, saying we don't want to serve them, they're too high risk. And Lending and Club and Prosper are advertising on the trolleys of the airport.
Mm-hmm.
Behold, I am in Hong Kong. We are opening up China. I'm going regularly to China
Mm-hmm.
for our consumer bank foray out there. And there I start seeing the Chinese market also taking up. So when I did a research, uh, as I was looking for, I said, I have done consumer lending all my life,
Mm-hmm.
right? And I've done it across Asia Pacific. Can I use that experience and create a peer-to-peer lending
Yeah,
platform?
fair enough.
So just just about playing with my strengths from here to the next season of my life.
So, how would you, let's say, define your first year of starting up? Would you say because it's a new product, was it tough to convince people in especially the Asian market? Because I know you were primarily also trying this in Hong Kong before.
So Hong Kong was a much better market for this,
Oh, okay.
right? People had a smaller geography, right?
Mm-hmm.
A lot of people had a lot of extra money, and our product was very simple rent cash. So if you are a
Okay.
landlord, you have a 11 month of rental which will come every month. You want to in cash it like a bill discounting for 11 months. We'll give it to
Ah,
you,
okay. Interesting.
which worked out beautifully. We were growing. But there were no guidelines around it.
Okay.
And at some point of time, the SEBI equivalent of India, SEC, Securities Exchange
Yeah,
Commission,
yeah.
defined this as a collective investment scheme. While we had all the papers, we had spoken to them, so there was no point going against the regulator.
Mm-hmm.
We always had a plan to enter India, and at that time, Raghuram Rajan published a draft guideline
Okay.
for lending in India. So
Interesting.
what we had done was, see, if you see in the banking world, core banking system, which is the liability system and the loan system, don't talk to each other. They don't need to talk to each other.
Mm-hmm.
In P2P lending, they need to talk to each other
Okay.
because Yash is investing in Mukesh's loan,
Mm-hmm.
is investing in Mukesh 2 loan, Mukesh 3 loan. And
Mm-hmm.
assume there's another Abhinav, he's not investing in any loans of Mukesh. So your portfolio is very different than Abhinav's construction of
Yep.
loans, right?
Yep.
Which does not happen in mutual funds. So that's why I keep this as a difference. So we had built that system out.
Okay.
And when we saw the opportunity in India, we said, anyway we wanted to come, we are Indians, we want to be here. We had done all the operations in India. We had not put operation team, technology team in Hong Kong. We put all that in India.
Oh,
So we came to
correct.
India.
Okay.
The draft guideline had two gaps broadly.
Mm-hmm.
One was it had not put the escrow mechanism of moving the money.
Okay.
So we went and explained that to RBI. And
Okay.
even before that, even while the final guideline was not there, we worked towards getting that together.
Mm-hmm.
And it took a lot of convincing to the trustees and bankers to come on that. And two, we were not licensed, so we wanted to one pull the bureau report, and
Mm-hmm.
two, the only one of the key factors in repayment collection is, are you reporting to bureau? Otherwise,
Correct.
you are a shadow lender. We didn't want to be shadow. We want to be one of the first ones. So we started how to report into bureau
Okay.
and pull the bureau report. So when we launched the platform, we had all these things in place even before the final guideline came out.
So with bureau reporting, you mean the CIBIL scores, right?
Yes, yes,
Correct.
yes.
Okay. Understood.
And
Interesting.
again, trust was the deficit.
Mm-hmm.
India has gone through many scams, so even though we
Mm-hmm.
had a good pedigree, we went to people who were more educated,
Mm-hmm.
uh, right? And they understood. So a lot of people, yes, based on what our pedigree was, had taken a bet on us,
Mm-hmm.
right? And we were very cautious. One of the jargons or whatever we use the sentence, giving money out is very easy, collecting very hard. So we kept that in mind. In fact, and we only tested the lending side in Chennai. South
Okay.
India is known for the best credit. Even when I worked in 1990s in the operation department, it was all best credit was in Chennai, not in North India. So we said, okay, we are Chennai-based company. How do we lend only to Chennai? How do we
Oh,
collect?
interesting. So that's why your HQ is in Chennai right now.
Yes, yes,
Very interesting. Yeah, I always wondered that. Why Chennai? Because most of the people are either sitting in Mumbai or Bangalore or Delhi.
yes.
So
So for
interesting.
Yeah, and again, nowadays, being digital, you can be anywhere
Yeah,
from
yeah,
your
yeah,
home.
of course.
And we took a lot of effort to make every process digital. I'll give you one example. That time, there was in the draft guideline phase, there was no limitation whether you can lend 50 lakh rupee or not. And we were talking
Mm-hmm.
to a banker to be on the lending side of our platform. They
Mm-hmm.
had gone through full due diligence and everything, but they did not agree to taking a digital signature that time. We were that clear.
Okay.
They
Okay.
said, you require a wet signature in the contract. I said, there's no
Uh-huh.
requirement. If you read IT Act,
Uh-huh.
in that it very clearly says what can be considered as electronic signature and how
Mm-hmm.
it will be taken to the court.
Mm-hmm.
So that we purposefully took one of our employees,
Mm-hmm.
told him not to pay us. He said,
Mm-hmm.
we'll if you're legal. We filed a case and we won the case.
Oh, wow. Okay.
We still took it to the banker, and the banker still did not agree.
Ah, yeah.
And by
Right.
that time, the final guideline came, and the final guideline had a huge ramification. They put a cap saying only 10
50
lakh rupees.
lakhs.
No, first they started with 10 lakh rupee, Yash,
Okay.
as a maximum cap. So that killed all our corporate
Big
endeavor
guys. Yeah.
policy. That just went away.
Hmm. Yeah, I guess, I mean, that must have been a tough stance for you. So let's say talking about regulation right now, how do you think it's shaping the industry? What do I mean to ask is, would you change anything in this regulation right now at this stage, given what has evolved over P2P platforms, right?
I think three parts. One, the
Mm-hmm.
regulation requires clarity. Uh,
Okay.
there are certain aspects which is silent in the guideline purely as NBFC P2P guideline. But if you
Oh.
look at overall NBFC guideline,
Mm-hmm.
you will find clarity. But
Mm-hmm.
there are two models of P2P lending running in India.
Mm-hmm.
One where you may not be necessarily aligned with a perpetual product. I call this an open-ended product
Mm-hmm.
because if Yash brings 10 lakh rupees,
Mm-hmm.
we don't assign a tenor like a fixed deposit saying you bring this for 6 months, Abhinav brings it for 12 months. No, because that creates asset liability mismatch,
Correct.
right? We don't do that. We tell Yash, you are choosing the loans or giving instruction to choose the loans.
Uh-huh.
And every time repayment comes, the two part, one EMI, the loan
Principal
principal,
and
and the other is interest, we can send it to back, or if you want to compound it, please be free.
mm-hmm.
But if you take your interest back, I cannot keep the principal uninvested because then how will I give you the yield? So I have to invest it again. So in a way, you got one more EMI, one more. So it's a perpetual.
Mm-hmm.
If you look at NBFC overall, we have a NBFC deposit taking, we have NBFC non-deposit taking, and NBFC P2P, and then there's host of housing finance and
Yeah,
the
yeah.
microfinance, right? But in a deposit taking company, you have to maintain 14% capital.
Okay.
In a P2P lending company, you are required to maintain a net own fund of 2 crores only.
So this is your own fund of 2 crores.
Yes,
Okay.
right? Second part is you cannot lend on your own
Okay.
in P2P lending platform.
Mm-hmm.
So we don't have any balance sheet. In a deposit taking company, they can take deposit, they have to anyway put their equity at play also for lending, right?
Mm-hmm.
So one is Bajaj Finance or a Shriram Finance or
Yes.
Pyramid, which are deposit, and then there's a P2P lending company.
Correct.
Now what we are seeing in P2P, there's one model which says, okay, whatever I lend, I don't, you should not care about. I will give you 8.5% for 3 months, 9% for 6 months, or 10% for 11, 12 months.
Mm-hmm.
And the remaining, the difference between lending rate and what I'm giving you is my,
Spread.
say, not spread. They're saying it's margin of safety,
Okay.
right? Now that margin of safety is the spread in a NBFC world.
Mm-hmm.
It can be used towards expenses. Ideally, it should be used for expenses alone in the NBFC P2P, and in a deposit taking, it will be taken towards the NPAs also.
Mm-hmm.
Lending companies cannot take NPA anywhere in their processes.
Okay.
The risk has to be transferred
Okay.
to the lender here.
So
Now,
you're just a pass through, right?
complete. So yes, the great word called pass through. That's what we are. We are a
Mm-hmm.
platform to provide services from origination
Mm-hmm.
all the way to collection and legal action if required.
Mm-hmm.
We cannot take any risk on our own or anywhere find a way to give you a guaranteed return. No.
Mm-hmm. So, just for the benefit of our viewers, asset liability mismatch is, when you have, let's say, 2000 rupees as an asset and you have a 2000 rupee loan, which where the tenure is, let's say, 2 years. But if you are investing that 2000 rupees with the possibility of taking it out even the next day, there is an asset liability mismatch happening here, where the platform doesn't know where will they get that 2000 rupees again for that loan again if they allow you to take it out uh, in a shorter duration than the loan duration. Have I explained that properly, Mukesh?
Yes, yes.
Does the RBI guideline, let's say, have any room for asset liability mismatch? Does it talk anything about it? Or, I mean, because there are some platforms in India right now who are offering 12% daily interest. You have the ability to take out your money the next day itself. So, given it's a one-to-one mapping and you are acting just as a pass-through, how is that possible?
Uh, I have put my brains as much as possible. Not in my view, in a way, somewhere they're using some balance sheet if possible.
Right.
Example, let's assume, Yash, you have brought in again 10 lakh rupees, you've invested in 1,000 loans.
Mm-hmm.
You've, after 3 days, you have a choice of only withdrawing the interest,
Mm-hmm.
withdrawing the full principal. Now, maybe out of those 1,000 loans, 10 have not paid in the first 3 days. So,
Mm-hmm.
how do you get your interest back?
Mm-hmm.
There are many permutation combinations.
Mm-hmm.
Let's assume you want to withdraw all the 10 lakh rupees. Does it mean they will take Yash's good and bad loan and give it to Mukesh? Is,
Mm-hmm.
is that should be done? Because Yash had taken the original risk. Mukesh is not even aware that we are giving some bad apples along with good apples to him in his investment.
Mm-hmm.
And what happens when this bad apple starts to grow too much in the
Mm-hmm.
portfolio? Who will be the one sitting? Because Yash would have exited, Mukesh would have exited by that time. Because
Mm-hmm.
you will always give a good remarks, right? Because you got your 8.5, 9%. I got my
Mm-hmm.
8.5, 9%, and I exited in 3 months' time. Much
Mm-hmm.
better than liquid fund returns, right? Or a much better than fixed deposit returns for three
Mm-hmm.
months. So
Very
there
interesting.
is so just because it's silent doesn't mean because you have to look at the overall framework of what is NBFC deposit taking and what is NBFC P2.
Understood. So I mean, how does Monexo solve for this problem of ALM then?
So we don't take any risk on our balance sheet. So
Okay.
example, if you bring 10 lakhs on our platform, we allow you to invest minimum 1,000 rupees per loan and 5,000,
Okay.
which means you will be diversified across 1,000 loans if you've taken.
Yeah.
Each loan will have its own tenure.
Okay.
Some may be weekly payment, some may be fortnightly payment, some may be monthly payment,
Mm-hmm.
some may be for 12 months, some may be for 3 months, some may be 24 months. So you've got a
Understood.
portfolio. Every month we collect repayment. Let's
Mm-hmm.
assume 1,000 loans, we were able to collect repayment in a particular month only for 990 cases.
Mm-hmm.
The amount is credited and the principal is reinvested and interest is sent out to you as a passive income on first of the month.
Mm-hmm.
Now you have a choice to withdraw that principal also, or you want to reinvest. It'll again the 24 months, which is the maximum, now becomes a 25 months time.
Mm-hmm.
At some point of time, one we believe it's a open-ended, a 13% return is a great product. You should keep it for long term. But in case whatever reason you have an emergency, we have a secondary market. But in
Okay.
secondary market, Yash can only sell the 990 loans which are current. The 10
Okay.
loans, Yash has to hold on to his portfolio because he started taking the risk and I can't pass that risk to somebody else.
Correct.
Only 990 loans, you have to come and say, I want to withdraw the 990 loans away. I want to redeem
Mm-hmm.
them. And then other investors will buy it from Yash. So
Mm-hmm.
it's assignment of loan between Yash and the new buyer.
But you will never take the loan on your risk and say, okay, and, whenever I find an investor, I'll take my money back. Never.
No, never. We cannot touch the loans at any point of time. It's very clearly prohibited in the RBI guidelines.
Understood. So, I mean, ALM asset liability mismatch is a very interesting conversation just because, one of the big banks in the US, Silicon Valley Bank, also collapsed just because of asset liability mismanagement, mismatch problems. And do you think that the same can happen in India with the P2P framework as well? Given, the capital requirement is just 2 crore rupees. And of course, some of the platforms are managing to the tune of thousands here overall. Uh, if this kind of mismatch happens and there's a run on the P2P platform for instant liquidity, this can happen here as well, right?
Yes, it can happen, and that's a risk which was highlighted in the newspaper by Tamal Bandyopadhyay also,
Mm-hmm.
right? And I'm very clear, if this guideline is silent, we have to look at overall framework of RBI different guidelines, right? Why would
Mm-hmm.
we get a guideline? Just because it's silent doesn't mean it's doable,
Mm-hmm.
right? It's example, logically speaking, without naming the company, prepaid card is a prepaid card. It's not a credit card. You cannot make
Mm-hmm.
a prepaid card look like a credit card. RBI took
Mm-hmm.
time to get to it, but it got to it.
Mm-hmm.
Right?
Understood. So, I mean, coming back to P2P as a investment option for, let's say, in the alternative investment space, we had COVID-19 pandemic, and I personally heard a lot of P2P platforms going bust. I mean, how did it, let's say, change your business in particular?
So in India, I don't think so. Any P2P lending company went bust because of COVID,
Okay,
uh, right? The ones which are operating have been operating pre-COVID, during COVID, and post-COVID.
okay.
In fact, the word P2P 2.0 got, I think, coined where, in a way, liquid fund, fixed tenor got coined during COVID and after COVID, so that the risk, perceived risk for the product is less for Yash as a lender on the platform.
Mm-hmm.
Uh, for Monexo specifically, few things emerged very in clear mind. One, we were always tracking the microfinance segment, and we had one of the things our vision is, which we talk about, is making borrowing affordable and investing rewarding,
Mm-hmm.
right? So we have been always looking at the microfinance segment,
Mm-hmm.
and during COVID we traveled extensively as a NBFC to some of the branches within Tamil Nadu,
Mm-hmm.
with MFI partners, and saw how beneficial these segment was, because one, it was only women borrowers; two, joint liability groups; three, uh, within the narrow, within a street of families, so they know each other every day.
Mm-hmm.
So we took a plunge slowly and steadily in that segment. We're
Okay,
very happy. We're very happy with this performance of that product now. We are
okay.
scaling the product again, measured, very measured. We continuously visit the market. Last week we were out for almost 5 6 days in the market, meeting end customers, meeting our branch operators, etc.
Understood.
Right. The second thing we did was, we understood earlier we giving, RBI used to allow us to give loans up to 3 years
Mm-hmm.
maximum to a borrower, and up to 10 lakh rupees, but we were giving for 5 lakh rupees.
Mm-hmm.
But what we realized is 3 years is a long term.
Mm-hmm.
And at the same time, we started seeing the industry and the Gen Z evolving, and India is very young now. They don't require a straight 5 lakh rupee, 3 lakh rupee loan. They require a 10,000 rupee, 5,000
Mm-hmm.
rupee, 15,000 rupee loan.
Mm-hmm.
We have created a product for that now.
Okay.
Now, if it's a high risk product, I must tell you, because in that the assessment is purely alternate bureau and account aggregator related.
Mm-hmm.
There's no physical visit. So India, if has a person has a low ethical component, he may not pay on time.
Mm-hmm.
Surely you will take the bureau report and you will show it to him, and all the collection call will happen. That's why we give 20% return on that product to the clients.
Okay.
On the microfinance, we have tested the product very well. It is performing very well. We give 13% to the investor or the lenders on that product. So if
Mm-hmm.
somebody puts the money across on this play, we believe he should be able to walk out with 13, 14% return after all the risk and our charges.
Very interesting. I think so. The microfinance product on the app is called Social Impact Loans, right?
Yes, yes.
Okay. Very interesting. And let's say these social impact loans, I know you said these are women and they probably live in the same village or on the same street, so they all know each other. But let's say one of the women genuinely defaults. Uh, bad income situation, whatever happens, how does Monexo, let's say, recover that money, or what's the ideology behind recovering that money? Because sometimes we have seen that multiple platforms have been constantly going behind people who are actually not able to pay, and this becomes a very big uh, problem. They resort to unethical practices and all that sort of stuff. So.
So, see, microfinance lending has now emerged to 3 lakh crores in India,
Hmm.
right? Banks, small finance banks, as well as uh, MFIs, pure MFI players are there in the market.
Hmm. Sorry,
This
MFI is. Uh,
Microfinance Institute.
Sorry. Yes. Okay.
So NBFC MFI, Microfinance Institute. So what we had here, when a woman, 6 women or 4 women become a group, one of them is a leader,
Hmm.
and every month meeting takes place,
Okay.
her house, where
Okay.
at a particular point of time they are supposed to bring money. Now, while there is now a huge understanding of how bureau plays a role in their
Hmm.
life, uh, the first thing is that those ladies were getting money at maybe 4%, 5% per month. This is
Wow.
much more affordable. So they want to keep this credit line going.
Hmm.
That's the first motive. Number two, now while CIBIL score or any other score will take time and maybe nobody will know
Hmm.
his credit score is dropping. But if I'm living in the same street, and let's assume you have a small party, a gathering at your house, and 3 days later you say, I don't have money to pay your EMI, that leader will know the fact, right? You had a get
Hmm.
together. So
Okay.
there's a shame of being in the same place. I know you, right?
Mm.
You are having fun,
Got
right?
it.
And these people are rooted in that community for a long time. It's not like you and me. We have lived in different cities, different housing complexes.
Hmm.
We are rooted there.
Hmm.
So it makes a lot of difference there.
Absolutely.
Cost, cost is huge differential. Shame and information, and the leader makes, and the joint liability. So what happens is the remaining four have to cough up money for him. They have to cover for her.
Oh, really? Okay. I mean, is that legally possible though?
Yes, that's the concept of joint liability,
Okay.
right? Now, does it happen in 100% cases? No. People can refuse
Hmm.
to, right? But
Hmm.
I'll give you example. During COVID time, there were customers whose loans were maturing, and we
Hmm.
said, why don't you take one more loan? So this lady is saying, what will I do with that money?
Hmm.
It's income generating loan, right? I can't do much with this money, so why should I take it? So
Hmm.
it's not just because money is available, hold it. They would like to buy something. So I'll give you one
Hmm.
example which we met last week. This lady has taken 3 cycles of loan. It's a weekly repayment. She runs a biryani store on the village, just outside
Okay.
village, to the highway, right? Now, only biryani was fantastic for her. She had taken 2 cycles of loan. She had grown the business well.
Hmm.
Now she applied for third loan. So I said, what will you do with this third loan? She
Hmm.
said, because my biryani business is so well set, I want to add other drinks also with it. Earlier,
Understood.
there used to be a person who used to sell drinks, so I did not want to eat into his business. But for
Hmm.
whatever reason, they have shut down that business, and now it used to support each other. When people used to come and drink something, they would come and buy biryani. When people
Hmm.
used to buy biryani, they used to buy something there. Now
Hmm.
that gap is there, and I want to fulfill that gap. So I need a working capital to take that shop, and I want to buy products and all. So it's always
Hmm.
income generating in a large way.
Hmm. Very interesting. I mean, credit, if used in the right way, can do
Change everything.
wonders. Yeah.
Yes. Yeah, and if you look at the whole Indian economy, I remember earlier in early 90s, there were not so many builders.
Hmm.
Housing loan became available. My father had no access to housing loan easily, right? One being
Mhm.
self-employed, self-employed
Mhm.
has its own challenges, right? So
Mhm.
he had to continuously save money and then build his own house. And I, as a Citibank employee, bought my first house within the third year because loans were
Mhm.
available, right? So it is a good thing if you use it responsibly because
Yes.
it allowed me to own a house when I was just 27.
Mhm. Very interesting. Mukesh, thank you so much. So, I think so. This is very helpful. Even the social impact loans is also personally gives me good conscience that my money is being used properly. But what if you have to summarize? How would you say Monexo is different from the other P2P platforms? Like, what differentiates you?
So see, every feature can get copied very easily.
Hmm.
Like the escrow account, when we did, people copied it. They went to the same company. Bureau reporting became part of the norm. Whatever we launched, secondary market people. So everything is copyable. What is not copyable is our first principle, which we operate with.
Hmm.
Example being, we never partnered with any Chinese apps. Because a
Okay.
lot of people came to us saying, we will give you loans, we'll give you FLDGs. We stayed away from them,
Okay.
right? We believe we are a trustee. We are running your money. And Yash, I know you have invested. So we are open kitchen. We have a lot of responsibility to make sure your money goes back to you, right?
Hmm.
So in my team members, if anybody uses saying you can get your money in 30 days,
Hmm.
he's told to leave the company. If he uses the word guaranteed in the sales pitch, he's told to leave because the first meeting itself we say these two words that this is
Hmm.
a kind of a product or it is a guaranteed product. We don't do it.
Okay.
So very high level of uh, compliance, regulatory compliance. We will take business risk,
Hmm.
which we manage, but we'll never take regulatory risk. That's
Hmm.
the approach which we work with, right?
Very ethical, in my opinion, for sure. So, I mean, good job there, definitely. And I'm sorry, I'm going a little bit off topic here, but I also read an article where people were talking about loaning out the NBFC P2P license for other activities. Can you probably talk a bit about that? What does that actually mean?
So assume you are a new age fintech.
Right?
You have a huge customer base.
Right?
You want to monetize them, uh, and we know every new bank or anybody wants to come to lending as a monetization. So you have both sides of the equation where borrowers are there, investors are there, but you don't have the license.
Hmm.
Nor do you have the platform. So you, in a way, conduit, bring your customers and use it. So there have been few examples of that. Uh, Bharat Pay is one of them who
Okay.
partnered with other P2P lending companies to bring their merchants' money as well as merchant borrowing onto the other platforms.
So, does Monexo also do this kind of lending?
Mm, we
I,
had we were approached. Uh, Again, there's no dearth of going to RBI and taking a license for a unicorns. We've stayed away from them. We're building credit logic,
hmm.
underwriting logic. In credit risk management, there are three or four scores. One
Hmm.
is application score, then there's a behavior score, then there's a collection score. I have a
Hmm.
team of data scientists sitting and learning from what is happening in our platforms and building these scores. We built
Hmm.
this at Citibank. Well, there I could have gone to the best people in the world.
Yeah.
Today I'm a startup myself, so I'm building it myself.
Mm-hmm.
These are the very invisible differences which we are doing in our company. I
Mm-hmm.
cannot show that it will only show up in the portfolio result over a period of time.
Mm-hmm. And if I may ask, what's your current AUM, which Monexo is acting as a pass-through for?
So the we have disbursed close to 250 odd crores of loans.
Okay.
And our outstanding is close to 100 crores.
Okay.
The
Got it.
the runoff is very fast.
Interesting. So I guess just to end it here, I mean, it's a kind of a fun question. I mean, how do you invest your own money per se? Because you're running a alternative investment platform yourself. I mean, how do your personal finances look like?
I wish I had, after doing the startup finance, left out. So right now, all my money, I'm not kidding. It's like full money into Monexo.
Oh my God. I mean, coming from a banking professional, I mean, I wouldn't say that is a very, diversified portfolio per se, but it talks about your conviction, but still very risky in my opinion.
It's very risky, but more and more convinced, without taking a name. Few NBFCs, large NBFCs have approached saying we appreciate understand this model. It allows us to go to the consumers.
Uh-huh.
Uh, if you take off an NBFC, every time they want to grow from, let's assume, 500 crores to 1000 crores of lending, they have to raise two things: one, capital, and the
Mm-hmm.
other is debt.
Mm-hmm.
Doing both of this itself, we know how hard it is.
Mm-hmm.
In our case, if you have to go from 100 crores to 500 crores, we don't require more capital. We'll be very soon profitable also.
Mm-hmm.
We need confidence of our consumers, right?
Mm-hmm.
So they approach us.
Mm-hmm.
We're very happy if more big players come and build this industry ethically. I believe if 16,000 crores can go from saving accounts to mutual fund,
Mm-hmm.
that can same thing can happen here also. It may not happen in 16,000 crores faster, but because of social media, understanding of alternate investment, good governance, a 13% return, that's what you make in mutual funds over 5 years.
Yeah.
We are giving you a passive 1% income per month. Where will you get
Mm-hmm.
that?
Mm-hmm.
So that's where the conviction keeps coming back.
Mm-hmm.
While the journey is hard, someday the fruits will be sweeter than
Yeah,
this.
it will all compound all together sooner or later. But, okay, thank you so much, Mukesh, for your time. I think this will be very helpful for our viewers, especially on the ALM piece, where people should be aware of this concept altogether and how some P2P platforms can fail if ALM is not done properly as well. Thank you so much. It was good speaking with you.
Thank you, Yash, for having me on your show.